let's unpack this. Welcome to the deep dive. Today, we're cutting through some of the noise, looking at recent insights. We'll explore the U.S. economy, policy moves, market shifts, the fast-moving stuff. Our mission, really, is to pull out the key takeaways for you, source by source, so you get a clear picture fast. Let's get started. So, first up, an insight called tighter belts. This one seems to show pressure building on the American consumer.
Yeah, that's right. What's particularly striking is how this cumulative inflation is really starting to bite into discretionary spending. And that's, the backbone of the economy.
Right.
And you've got these elevated long rates plus high house prices. It makes mortgage affordability just historically low. We're even seeing delinquencies in multifamily housing hitting levels not seen since the Great Financial Crisis.
Right.
About 4.3% of consumer debt is delinquent somehow, 2.8% seriously so.
And the source connects this consumer strain directly to presidential popularity. That's interesting.
Exactly. It suggests this economic pinch affects approval ratings, and that leads to, political pressure on the Fed, calls to lower rates, maybe give consumers a break.
Even if it risks more inflation down the line.
Potentially, yes. That's the tightrope they're walking.
Okay, shifting gears. Let's look at liquidity shock, a global thing, this one.
It is. The world is just awash in monetary stimulus. We're talking 65 central bank rate cuts expected globally in 2025.
65. Wow. So it raises this big question. Why is the U.S. Fed staying put? Remaining cautious, seemingly out of step. The source speculates, maybe Powell doesn't fully trust the BLS data, the official inflation numbers, or maybe he's worried about tariffs, the new fiscal bill.
Lots of moving parts. And the market's already pricing in a September cut, like 90% probability.
It is, which makes that Jackson Hole meeting in August really critical. It'll set the stage for September's decision.
Okay, next. More power. This sounds like U.S.-China competition. It is, but specifically focused on AI and the, frankly, enormous energy needed for data centers. The U.S. apparently needs to triple its energy production in just 5 years. Triple it.
Wow.
And revamp an electrical grid that's so old, a mere 10% demand increase could potentially cause collapses. It's not just supply, it's the infrastructure, it's competitiveness.
And the source mentions a potential strategic mistake with this. One big, beautiful bill, the OBBB, phasing out tax credits too soon.
Exactly. If those investment and production tax credits phase out after 2027, it could be a real problem. Catching up needs like $50 to $100 billion annually for the next decade.
That's huge.
Yeah, using everything, nuclear, solar, natural gas, a diverse mix.
All right, let's unpack high stakes, published 3 days ago. Tax bill debated, but markets are hitting highs. Seems counterintuitive.
Well, this new bill, if it passes, it's set to add another $5 trillion to the debt ceiling. Government debt could hit $42 trillion.
$5 trillion. Oh.
And at the same time, the source notes the REPO market was under stress, short-term funding issues. Plus, those rumors about the administration wanting a new Fed chair, they're becoming a pretty solid fact, according to this insight.
So, connecting the dots. The market sees a rate cut coming in September. More debt, more stimulus.
Exactly. Equities seem to love the liquidity wave, even if the dollar sinks and valuations get stretched.
Okay, now this one sounds interesting. Race to the bottom from a financial innovation.
Yeah, this is about Robinhood. They've put forward a project to tokenize securities stocks, ETFs on the blockchain.
Tokenize. So turn them into digital units.
Essentially, yes,
Right.
which would allow for super efficient zero commission trading.
Zero commission. So the big question is, what happens to traditional exchanges? The whole brokerage industry built on commissions.
That's the multi-trillion-dollar question, isn't it? It really could signal a race to the bottom for brokerage fees, even with models like pay-for-flow trying to find other revenue.
Right. Fast forward to yesterday, roadblocks. The tax bill hit a snag.
It did. 5 conservative representatives blocked it, at least temporarily. And adding to the mix, the ADP private payroll report came in negative. Not a good sign for the labor market.
So in that context, Trump is asking Powell to resign, blaming the Fed.
That's what the source indicates, yes. Seeing the Fed chair is the problem. But you have these really mixed signals, right?
Yeah.
Equities making new highs, but Treasury yields are lower, which usually signals an economic slowdown is expected. It's confusing.
And trade pressure on China continues, the deal with Vietnam.
Yes, imposing tariffs on goods coming directly from Vietnam and, crucially, on goods being transshipped through Vietnam from China to avoid U.S. tariffs.
And finally, Habemus bill. They got the votes.
Looks like it. As expected, the source says the speaker delivered the big, beautiful bill to the Resolute desk. Passed.
Okay. And other news. Unemployment. Tariffs.
Yeah, June unemployment actually ticked down to 4.1%. And tariff revenue coming in at a $300 billion annualized pace. So the White House is apparently ecstatic, though the source notes Trump still wishes rates were lower.
Which brings up that question again. If taxes are down, unemployment's lower. Why would the Fed cut rates? Their data-dependent views suggest inflation risks are still there.
Precisely. But the source describes the administration's approach as all in now, just pure adrenaline for the economy.
All in now.
Yeah. The source suggests it's kind of unusual, a president trying to deliver on basically every promise immediately, and maybe we're not quite used to it or ready for the consequences.
So we've just covered a lot there, a really complex web of policy, markets, tech,
Yeah.
all happening right now.
Yeah, and understanding how these pieces fit together, or maybe don't fit together smoothly, takes looking beyond just the headlines. As we see markets hitting highs while consumers feel squeezed and there's this huge energy demand looming, maybe we need to question some fundamental assumptions about how all this is supposed to work.
That's a great point to leave our listeners with. Thanks for joining us on this deep dive. We hope this gave you that shortcut to being well informed.